Okay, right now we're gonna start a price action. Price action is actually a movement of price. I already show you something. This is actually an uptrend. What you see, it is an uptrend, and these black candles are sell side candlesticks that represent the sell side. The green ones that are buy side candlesticks. So this is a monthly time frame. Should we do this? This is a previous downclose candle. The reason why we call it a downclose is because, as you can see, it opened here, 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 here. It opened here, and it closed here. That's why I call it a downclose candle. Here we define them as order blocks. Change state of delivery. Because this is the last sell side candle before price changed its direction and decided to go up. So we call it an order block. Price changed its state of delivery. Price's previous state of delivery, as you can see, this was some sort of consolidation around here. Remember what we said about consolidation, no bias, price moving sideways. Around this level here, this was consolidation, but as you can see, it shows that price was from a downtrend. It consolidated and then continued its downtrend. And what I had told you again is that when price triggers the other side of the market price, it changes its direction. As you can see here, below these candles here, let me use an arrow. Let me find an arrow. Below these candles, as you can see, this candle and this candle. You have to write this down. It's very important. This is very important. This is very important. This level here, you can see, it's relatively equal to this level. We describe this as relatively equal lows. As you remember, I told you that where there's consolidation, there's relatively equal lows and highs. As you can see, even here, this high is relatively equal to this high. Even when they're not that equal, they're relatively equal. The same as this. So price, the reason why it made this movement of this candlestick here is because of this. It's because of this. The level of these candles. There was liquidity resting below these candles. Remember what I said, price is driven by liquidity. Liquidity inspires, motivates price to move, inspires price to move. That's the reason why this candle was a downclose candle, wiping out this liquidity strip. This is what we call liquidity strip. This or downclose candle moving below the level of this relatively equal loss. That's what we call liquidity strip. After it triggered the other side of the market, as you can see, it changed its direction, it changed momentum, and it started moving up. As you can see, expansion, retracement, balancing the range, because from here to up here, this is a whole range. This is what you call a range. It's a whole range. So it's expansion, retracement, expansion, retracement, expansion. As you can see, as price expands, retrace and expands, it actually ships out liquidity on this on this above this candlestick, which is called shift of market structure. Price is shifting its market structure by creating a new high, wiping out what it previously created, which is a high. Went down to balance the range on retracement, a pullback, went up again to create a new high, wiping out this one, went down to balance the range, then went up again to create a new high. Shift of market structure. And I want to show you something. Let's continue. As price is on a momentum, as I told you, the level of the previous down close candles. Let's start with this one. Those are the levels of these previous down close candles, which are sell side candles. As you can see, they're supporting price to keep on going up. They're supporting price to gain momentum to keep on going up. But remember, this is on a monthly time frame, which means that there's less price action going on. I just want to show you that the levels of these sell side candlesticks, they're supporting price to go up, all of them. Where price was pulling back to retrace to balance the range before shifting structure, the levels of this, the last down close, which are sell side candles, when price actually, as you can see, as you can see how price reacts within these levels of these previous down close candles. As you can see here, this level, as you can see, the body, look at the body of this buy side candle. Look at it, open, close, next one momentum, open, close. The level of this previous down close candle. Look at this, open. You can see, close, open, close. Look, the same level. It cannot just pierce down here because it's respecting the level of this candle, previous down close candle, because it's supporting price to go up. As you can see, supporting price to go up. As you can see, supporting price to go up. This is a buy side momentum. Here, shift of market structure. Shift of market structure. I just have to mark it out. Shift of market structure. Remember, this is a monthly time frame, which means that there's less price action going on. Remember this relatively equal loss. This relatively equal loss, because they're on the same level, as you can see. Same level. Liquidity ship, wiping out this, triggering price to go up, changes direction, because it is done wiping out the sell side liquidity. That's going for the buy side liquidity, created a high, wiped out liquidity from here by creating this high. Balance the range, wiped out this liquidity here by creating this high. Balance the range, wiped out this liquidity from here by creating this high. Balance the range a little bit, created liquidity here, wiping out this high. It's on buy side momentum. This is a range from here to here. It's a range. Okay, let me show you shift on market structure. As you can see, what I'm marking out here is shift of market structure. This is what we call shift of market structure. The reason I call shift of market structure, there's a high here. Because on this level, this is the highest high. Then what happens? Price moves down here, wiping out liquidity below this relatively quite lows here. Then moves and shifts structure by creating this high. Moves back down. Moves up, shifts market structure by creating this high. Back down, shifts market structure by creating this high here. And this is a monthly time frame, remember. So there's less price action going on. This, we define it as, this is the last sell side candlestick on this time frame. The last sell side candlestick, down close candle, specifically defining a down close candle here. So we call it an order block, changes date of delivery. It wiped out this relatively quite loss. Everything which I'm teaching is how somehow related. These are relatively quite low. So price is driven by liquidity. There's liquidity resting below these candles, below these sell-side candles. So price is forced to wipe out this liquidity because there's a lot of liquidity resting here because there's consolidation. Which actually, where there's consolidation, price moving sideways, where there's a bias, there are relatively quite lows and highs. You see, so price moved down here, wiped out liquidity here, created, this is the last sell side down close candle. So after wiping out, so we are marking it out because price triggered the last sell side liquidity. It wiped it out. So this candlestick, we define it as an order block, change in state of delivery because price now is gaining momentum, respecting the level of this candle to go up, as you can see. It traced back into the level of this candle, but it could not pierce down here. It respected the level, gained momentum, went up. The level of another previously down close candle, as you can see. All of the levels of this previous down close candles, the last ones that are respected, this is an indication of an upward movement. I remember just using this line to mark out this the level of these candles. As you can see, move to weekly. It's more of cheat codes. I would find it. What I'm teaching is more of cheat codes. This is real price action. They don't teach it like this. I'm not bragging. I teach pure, authentic, raw price action. I'm trying to show you something here. This is the level. You see this level? The relatively equal loss. You see? You see? That's liquidity. Inspired price to trigger. You see? And these are relatively equal highs, as you can see. Same level. You see what I was talking about? You see? Now we're on a weekly time frame for a monthly. You see? They're relatively equal on the same level because this is consolidation, no bias. Price is moving sideways. You see? It failed to trigger out the high. Instead, it went for the low, trigger out this liquidity. This is called liquidity strip. Wiped out liquidity here. Wiped it out. Wiped out liquidity here. Some people actually they trade these high time frames. That people trade these high time frames, especially institutions with big money. They trade these high time frames. So here is an entry point. Here, when you realize that price create relatively equal highs, attempted to trigger out, wipe out this relatively equal high, but failed and instead went down for this relatively equal loss here. Some people maybe like institutional traders, they go along here, they enter here, they enter buy because they know that price is done. It triggered out that the last liquidity which was there, which was the sell side liquidity. It's now done. It's now changes state of delivery by going up, as you can see. The level of that candle from the monthly time frame. This is the same level as you can see. Let me show you. It's the same level, you see. It's the same level. Previous down close candles from this from the monthly time frame, as you can see. Let's go to weekly. Same level after triggering price from sell side liquidity from this previous down close candles, which are carrying liquidity relatively quite loss from a consolidation channel. Price moving sideways, having no bias. Now, after we trigger out sell liquidity, what's next? There's liquidity resting here, above here, because these are relatively quite highs. There's a lot of liquidity here. Remember, price is driven by liquidity to move. There's liquidity here, a lot of buy side liquidity here. So it's done its duty by clearing its sell liquidity. Now it's going out for the buy side liquidity. So the previous down close candle is now supporting price. The level of the previous down close candle supporting price. The level of the previous down close candle supporting price, as you can see. With the time frame. so that we trigger our liquidity. As you can see, the levels of the previous downclose candle supporting price. This is the daily time frame. You see that the price action now is increasing. Okay, we got now where the trick is. See, liquidity was triggered out. Price changes date of delivery went to target the buy side liquidity. And get another arrow here. Price triggered our liquidity down here, made a rally going down, triggering liquidity which is resting below here with relatively quite loss. Now I think let me just remove this. Too much disturbance. This is still the same level of this candlesticks that we marked on the monthly time frame. This one we define it as an order block, changing state of delivery. That's where orders were made. The big buy side orders were made. As you can see, still the same level of this previous downclose candle, supporting price to go up. Price is on a rally. It keeps on targeting the highs. You can see it's on a rally. Created a high, went down to balance the range, retracement, pullback. You can see retracement, pullback, then went up again. Shift omega structure, retracement, pullback, continued, created a high, retracement, pullback, triggered out the high, same level. As you can see now, here's a daily time frame. This is a daily time frame. Now we continue with the tricks. I'm still gonna mark out the level of the previous downclose candle supporting price. This is the level of the previous downclose candle supporting price to go up. We're on a rally because right here we have buy side liquidity. On top of here, I'm using a mobile version of MetaTrader 5 guys and a screen recorder for my YouTube viewers because I'll be uploading this on YouTube. There's buy side liquidity on top here. I want to show you a trick. It's more of cheat codes. They don't teach price action this raw. I'm actually Michael J. Harrison's student, the inner circle trader. You know the guy been doing it for 3 decades. So it's a lot of experience. I'm learning this from somebody who has a lot of experience actually. The level of the previous down close candles, the sell side candles. A down close candle opens. You can see it opens here, up from an up point, and close to, as you can see, it's a down close candle because it closes here, opens here, closes here. So you classify it as a down close candle. Sell side candles usually present the sell side. Also specified as down close candles. As you can see, the level of this down close candle supporting price to go up. The level of this down close candle supporting price to go up. As you can see, and price action is increasing from monthly. I want to show you a trick from monthly. There's less price action going on here. This is shift from market structure. This is the level of the previous down close candle supporting price to go up. As you can see, price is actually respecting these ranges. Price actually, as you can see, price is respecting this range, the range of the previous down close candles. Look, price is respecting the range of the previous down close candles. Look, it won't pierce down here. It's respecting the range of this previous down close candles, indicating that price on a momentum to keep on going up. It keeps on shifting structure, triggering out, shipping out, wiping out buy sell liquidity that is previously created, indicating that it keeps on gaining momentum to go up because the levels of these previous down close candles, they're supporting price to go up. As you can see, the level of this candle has been respected. As you can see, even the level of this candle has been respected here. You can see it's gaining momentum from the levels of the previous down close candles. Keep on they're pushing price to go up. Less price action going on here. This is the monthly. Weekly pricing, as you can see, this is the same level of the previous down close candles. Same level as the previous down close candles. Same level of this previous down close candle supporting price to go up. This is the weekly. This is the buy sell liquidity from the daily time frame that I had marked down. I got the daily time frame. This buy sell liquidity on top of here. Level of this are open and close. This is a down close candle. Look, it's a down close candle. It's a down close candle. And this level is supporting price to go up. Look, price comes here at the same level of the previous down close candle. Gains momentum, goes up. Why? Because there's buy side liquidity here. Here. On top here. There's buy side liquidity here. Resting on top here. Okay, we'll continue with the session with the next video.